Yeah, good morning, everyone. So yesterday we saw US market bouncing back from the lower level. Uh, some short covering was seen in that market, specifically driven by some good results as well. Apart from that, if you see, dollar index also had shown some reversal and come off marginally. Uh, Whereas Asian markets are today morning mix, some are up and some are more of a flattish or some negative as well. Whereas commodities are showing a positive trend. Oil is up by almost around $2, whereas iron ore and steel both are up by around 0.5%. So overall mixed outlook is visible from the international market. Need to watch whether the FI selling continue or no. We had seen last 2 days post downgrade of US rating by Fitch. We had some uh, and money withdrawal by the FI from the emerging market, including India. Also, a key reason was dollar getting appreciated. So one need to keep some eye on that as well, where the dollar is moving. So seems like more of a sideways day for the Indian market. And I'll request technical team to take up from here.
Thank you, sir. Very good morning, all of you. So we have seen a selling pressure in yesterday's trading session, but in the later half, we have seen in the last 1 hour, we have seen a bounce back from 19,300 levels to 19,400 levels, and it has closed around that. And taking the cues from the global markets today, we feel it is going to be a flattish opening today, and we are expecting a slight sideways move today. Whereas if the selling intensifies, then again 19,270 will act as a very important support zone. And if that is broken, then 19,150 will act as a support zone, which is somewhere close to its 50-day moving average, followed by 19,080. Whereas if we expect a bounce back today, then Nifty can then there's a big resistance lies at 19,500, followed by 19,620. Moving on to Bank Nifty has shown a similar move like Nifty. It has given a strong breakdown in yesterday's trading session, and it has shown a very small bounce back of, let's say, 200 to 50 points from its lower levels. Bank Nifty has closed near its 50-day moving average, which is around 44,730, which is a very important support zone. Uh, but the immediate support zone, if we witness a selling, then 44,400, followed by 44,000. And if there's a bounce back, then 45,000 will act as a very important resistance zone, and a good rally will only be seen above 45,000 to 45,000 levels for a target of 45 to 40. Moving on to Nifty Financial Services, it has given a closing below 20,000 levels. The immediate support for this index is placed at 19,870 and 19,800. Again, if this index starts moving above 20,000, then 20,150 will act as a very important resistance zone for this index. It is going to be a very stock specific market. We request everyone to trade with strict stop losses. AU Bank is looking good at current levels. You can take a buy call for a target of 760 when it breaches above 730, and a stop loss for this stock is placed at 715. Also, Deepak Nitrite is looking good at current levels. It is consolidating, and we can expect a breakout any moment for a target of 2100. Again, it is going to be stock specific for a stop loss of 1958. So that's all from my side. I request derivatives team to take the call forward.
Yeah, thank you. Very good morning, everyone. So on the derivatives front, as you're saying that in yesterday's session, also we are seeing that the major sell-off has been witnessed. So from last two trading sessions, we are seeing that almost 300-point fall has been seen from the Nifty index. While in today's trading session, we expect more sell-off to be continued in the second half. In the first half, we might see some market to be in the range-bound momentum because we are seeing that at 19,400 level, heavy corridor positions got added up. Almost 20 million positions have got added at 19,400 level. So once if Nifty goes about 19,400 level on the spot basis, then only we might see some stability, or else again sell-off will be witnessed. On the downside, support for the next support for the Nifty will be at 19,200 level. Below 19,200 level, market will can drop below 19,000 level. So 19,200 will act as an important support. If Nifty manages to hold the 19,200 and gives a bounce back from that level, then fresh buying can be witnessed from the near zone. So at the current scenario, we expect for next 2 to 3 trading session, more pressure will be witnessed in the market. While PCROI yesterday closed at 0.77, PCR is still having a downside level at 0.72 to 0.68 level. While India VIX closed at 11.19. As I said in previous trading session also, that if India VIX goes above 13.5, then only we might see some confirmation from the seller front. But till the time India VIX is not going below 13.5 level, till that point of time, we might not see some major shorts creating in the market. So market seems to be from the cautious zone towards the 19,200, 19,000 level. From that level, we might see again some bounce back in the market. So that's it from the derivative front. Thank you.
Good morning. KEC International result is marginally ahead of expectation. Revenue grew 28% year on year and was around 7% ahead of estimates. EBITDA margin came at 5.8% versus expectation of 5.6. And absolute EBITDA was around 10% ahead of estimates. Year-on-year order book has grown by 27% and stands at 30,000 crores, whereas it was flat on QOQ basis. Also, company has secured new orders yesterday worth almost 1,000 crores. And year-to-date order intake stands at 4,500 crores, which is a growth of 30% year-on-year. So we are positive on KEC. Aavas Financiers result is below expectation on 3 counts. First is declining NIMs by 30 basis points, resulting in lower net interest income growth on sequential basis. In fact, it declined. Elevated OPEX, which grew 11% sequentially. This also impacted the operating profits, and even the net profit was 13% below estimates because of this. And also disbursements declined by 2% year on year. Last quarter, the MD had resigned in Aavas, so that could be one of the factors that growth has kind of slowed down. So we are neutral on Aavas. Karnataka Bank result has improved. Advances growth was hardly 6% year on year. However, the new management team has joined recently, and they have guided for growth of 18 to 20%. NIM declined by 20 basis points to 3.7% and is expected to stabilize here. Credit cost came at 1% versus sequentially 1.7, and the whole of last year was at 1.3. And it is expected to remain at around 1% odd levels, so that will support ROAs. We are positive on the stock. It is still trading at valuation that are below that of PSU banks. It is trading at 0.7 times price to book, and we think it can re-rate to around 1 time in next 2 to 3 quarters. LIC Housing Finance result is above expectation, mainly because of expansion in NIMs. NIMs came at 3.2% against last quarter 2.9. Asset quality was in line with a seasonal increase in other HFCs also that we have seen. Disbursements disbursement was down 30% both year on year and QOQ basis, and even its individual housing loan segment was down steeply, and that's why the loan growth was flattish QOQ and up just 8% year on year. Valuation is supportive at 0.8 times price to book based on the results that we have seen. So a short-term move is possible, but from a long-term perspective, we are not that enthusiastic. Venus Pipes result has improved on the back of strong increase in margins. Revenue grew 2% sequentially, but 58% year on year. EBITDA margin came at 15.4% versus normal level that we've seen in last few quarters of around 12.5%. So almost 3 percentage points increase. The expanded capacity having higher margins is yet not reflected in this result, as that new capacity started in the month of July. So expect that margins can sustain in coming quarters and in fact even improve from here on. Profit came at 17 crores versus 13 crores in March quarter and 9 crores last year. We remain positive. DCX System, it's a defense company whose IPO came last year. Result has declined. Revenue margins both have declined sharply. Even the order book has been declining since many quarters. Order book stood at 1,535 crores against 1,700 crores in March quarter. One can ignore the stock. There are much better plays available in defense space. So out of these results that we discussed, the ones which stood out were Venus Pipes and Karnataka Mine. Thank you.
Good morning. Zomato has posted above expectation numbers for the quarter with revenue growing by 17.5% QOQ and coming at 2,416 crore. Losses minimized at the profitability level. EBITDA came in at a loss of 48 crores was expectation of loss of 208 crores. Other than this, Bharti Airtel has posted marginally above expectation numbers for the quarter, both on the revenue and the margin front. ARPU came at rupees 200 versus expectation of rupees 199. Stock is trading at a 6.9 times FY25 EV by EBITDA. Thank you.
Yeah, good morning. Novelis, which is Hindalco's subsidiary, reported improving set of numbers. Sales volume came in at 879,000 ton versus 936,000 ton. Revenue was lower on sequentially and year-on-year basis. However, EBITDA per ton came in at $479 versus $431 sequentially. The company has guided its EBITDA guidance from $425 to $450 to $450 to $500 in the next few quarters. As channel destocking from the beverage can segment is almost completed, management expects the volumes to pick up in the coming quarters. So this is positive for Hindalco. Thank you.
Good morning, everyone. Dabur India Limited posted the results and results were in line with expectations. The overall revenue grew by 11% on a YOY basis, driven by the strong double-digit growth in both home and personal care and healthcare businesses. During the quarter, it has also reported the market share gains across 90% of its portfolio. The management is expected to increase its investment in the advertising expenses by 30%. And this is largely on account of gross margin improvements. The total capex planned for the year is at rupees 450 crore, of which 160 crore is already spent during the quarter. We are positive on the Dabur India on account of the management is maintaining the EBITDA margin guidance at 19% and in the range of 19% and 19.5% and mid-single digit volume growth. The stock is trading at 50 times to FY24 EPS. Deepak Nitrite Limited result was below expectations. The revenue degrew by 14% on a YY basis. This was largely due to inventory destocking and a slowdown in Europe and other global markets. The EBITDA margin reported at 11.9% versus the expectation of 15%. This was largely due to sharp decline in the realizations after the China dumping in the overall global markets. Despite this, during the quarter, it has observed advanced intermediates. The margin for the advanced intermediates has improved to 20% from 19% in the preceding quarter. The stock is trading at a PE of 25.4 times to FY24 EPS, and we will share the outlook post the con call scheduled on next week or Tuesday. Clean Science and Technology Limited result was below expectations. The revenue degrew by 19.6% on a YY basis. This was largely due to lower prices, lower volume and realization both impacted both the segments of performance chemicals and pharma and agro intermediates, while volumes were better in FMCG chemicals, but realizations were corrected. The EBITDA margin reported at 40.5%, which was largely steady on account of better product mix, lower input prices, and prudent operating cost structure. Our structural view is positive on the company on account of its innovation-based products and the business model. But near-term challenges may provide an opportunity for a better entry point in the stock. The stock is trading at a PE of 40.9 times to FY24 EPS. Thank you.
Good morning. Isham Motors result came out and they were marginally above expectation as the revenue came at 3,901 crores, which grew by 20% YOY. EBITDA margin came at 26% versus 24% on YOY basis. Price hike, saving in sourcing cost, and the product mix led to the growth in margin. Royal Enfield saw a stellar performance where the star models were Hunter 350 and Super Meteor 650. Further, new launches are lined up in coming quarters. CV industry has done reasonably well and it will continue to flourish with seasonal fluctuations as per the management guidance and with continuous focus on e-mobility. New e-bus order is under execution in Kerala. Also in Q2 FY24, management will be undertaking 1.5% of price hike in certain models, and the continued weakness is expected in Aisha's traditional export markets as well. At present, stock is trading at PE of 28.4 times of FY24 EPS. MRF Limited result was ahead expectation as revenue came at 6,323 crores versus expectation of 5,900 crores, growing by 10.4% sequentially and 12.9% on YY basis. EBITDA margin came at 17.6%, which was higher on YY basis from 8.5%. The increase in sales was a result of growth in all the product groups. The company's board has approved the reappointment of KM Mammon as MD for period of 5 years, which will be effective from February 8, 2024. Stock is trading at PE of 27.9 times of FY24 EPS. Minda Corporation Limited result was posted and the result was marginally below expectation as revenue came at 1075 crores versus expectation of 1136 crores, which grew marginally by 6% on YOY basis. With strong customer base, strong product portfolio, and presence across segments. EBITDA margin stood at 10.7%, which grew by 12 basis points YOY, with higher finance cost and depreciation on the back of investment in capacity addition and technology. Demand is expected to remain moderate due to seasonality and will pick up with festive season. At present, the stock is trading at PE of 23.7 times of FY24 EPS. Thank you.
Yeah, HCC has reported results yesterday, and result was in line. Though year on year it shows good improvement, but if we compare it with last 4 quarters, this is at the average level. Company reported EBITDA margin of around 12.6%. Uh, and also the order book came bit softer as compared to last quarter. The order book came in at 13,500 crores versus last quarter 14,772 crores. So there were no great booking of the orders in this quarter, though executions were there. If we see the valuations are, if we talk about the trailing basis, the last 4 quarters, it is trading at somewhere at around 7 times EV by EBITDA. Whereas the other infra companies in construction sectors are also trading at around 6-7 times. The potential for the upside comes from their international subsidiary that is in Switzerland. And also, whatever the assets they are selling in process to Q, there is an upside potential in that. So that can come, and there is a possibility of improvement in margins from the current level of around 12%. So all these together put up some optional possibility of positiveness in the company. Considering that a lot of new projects are in pipeline for the to be awarded in the current year, the outlook is positive for Hindustan Construction Company. That's all from me. Now request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, we are expecting some pullback in commodities, and one can initiate a buy in gold around 59,350 with a stop loss of 59,100. Silver also one can initiate a buy around 52,200 and maintain a stop loss of 71,700. On upside, we are looking for 73,000, 73,200. In crude oil, 6,800 is a hurdle at this moment. So unless it is breached, prices can correct till 66.50, and again expect the positive momentum to continue. However, if it is sustaining above 6,800, then we might see some positive outcome, and it may test further till 6,900. So all in all, for the today, it is expected to trade within 6,800 to 6,650. If it sustains above 68, then we might add the positions with a stop loss of 204. On upside, 222, 223 is the target we are looking for. And metal front also, the momentum should be positive. So zinc, one can initiate a buy around 222, 221.50 and maintain a stop loss of 220. On upside, we are expecting 225 to 27. And in copper, 41, 42 is the area where we are looking to buy the metal, and maintaining a stop loss of 237 to 36. On upside, 252 to 55 is the target we are expecting in a day or two. So that's it from me. I'll ask Utkarsh to take the call forward.
Thank you, sir. Very good morning, all of you. For today's trading session, we are expecting some downside momentum in USD INR. So one can initiate a short positions in the range of 82.78 to 82.82 levels with a strict stop loss of 82.91 levels. And for the target, 82.71 and 82.63 levels. If prices closes sustains below 82.65 levels, then we see some long unwinding. So for that levels, we can hold positions for the target of 82.50 levels. And JPY INR prices are consolidating in a smaller range for last 2 to 3 trading sessions. So for today's trading session, if price is sustaining above 58.40 levels, so one can initiate a long positions with a stop loss of 57.96. Target of 58.78 and 58.99 levels. Thank you.